A seal on the rate cut, a CPPE says it is good business. The Center for the Promotion of Private Enterprise, CPPE, has reacted to the Central Bank of Nigeria's decision to retain the country's monetary policy rate at 26.50%. In a statement by CPPE Chief Executive Officer, he said the Monetary Policy Committee's decision to hold interest rate was a pragmatic move and good for Nigerian businesses, as the Apex Bank Governor Laimi Cardoso made the announcement at the MPC members' decision at its 305th meeting to retain the interest rate at 26.50%. The decision to hold rates therefore demonstrates a commendable recognition that excessive tightening at this stage could suffocate productivity, weaken industrial recovery, constrain investment appetite, and undermine employment generation. Economics do not grow on the strength of high interest rates, they grow on the strength of productivity, enterprise, investment, confidence, and policy coherence, CPEE stated. Still in the context of Nigeria, Femi Otodola has disclosed that he sold his stake in Gerago Power PLC to position himself for investment in the proposed initial public offering of Dangote Petroleum Refinery, describing the facility as a transformative industrial project capable of reducing Africa's dependence on imported petroleum products. The chairman of First Holding Corporation, Femi Otodola, has disclosed plans to invest $100 million in the Dangote refinery. Otodola made this known on Wednesday after he visited the refinery with senior executives from First Holding Corporation. The Dangote refinery is a 650,000 barrels per day petroleum and petrochemical facility located in the Lekki Free Zone in Lagos, Nigeria. The world's largest single-train refinery, owned by the Dangote Group, is built to supply over 100% of Nigeria's fuel demands and export surplus to the broader African market. He said that Dangote is a genius and one of the greatest men to emerge from Africa. What he has achieved is helping to liberate the continent from economic dependency and import reliance. Otodola also expressed confidence in the group's planned expansion of refining capacity to 1.4 million barrels per day, noting that Africa's growing demand for refined petroleum products supports further investment in domestic refining infrastructure. Still in Nigeria, Nigeria's crude oil exports played a significant role in raising total trade between Nigeria and the United Kingdom to £7.6 billion in 2025, according to the new trade and investment figures released by the UK Department for Business and Trade. A fact sheet seen in Abuja showed that crude was still Nigeria's biggest export to the UK. The UK bought £719.2 million worth of crude from Nigeria, making up almost half of all goods imported from the country. The UK also imported £514.3 million worth of refined oil products and £167.8 million worth of gas from Nigeria. Other Nigerian exports into the UK market included coffee, tea, and cocoa, and valued at £17.9 million, alongside processed fertilizers worth £17.2 million. The report revealed that total trade in goods and services between both countries rose by 10.8%, or £737 million in current prices, compared with the fourth quarter to the end of the fourth quarter of 2024. UK import from Nigeria amounted to £2.1 billion during the period, representing an increase of 11.3%, or £216 million in current prices. Goods accounted for £1.5 billion, or 71% of imports, while services contributed £614 million, or 29%. Imports of goods from Nigeria rose significantly by 18.8%, an equivalent of £238 million, while imports of services declined by 3.5%, or £22 million over the same period. On the export side, the UK exported goods and services valued at £5.5 billion to Nigeria, up by 10.5%, or £521 million in current prices from the previous year. Goods accounted for £1.8 billion, or 32.2%, at 32.3% of exports, while services made up £3.7 billion, or 67.7%. Still talking about exports, and Nigeria's non-oil export sector is facing mounting pressure from rising logistics and energy costs despite growing global demand and increasing export value. A new industry report has revealed. The report unveiled on Wednesday during a virtual event theme, High Confidence, High Cost, Nigeria's non-oil exporters signal growth amid structural constraints. I showed that 77.7% of exporters experienced rising inland transportation and port handling costs between 2021 and 2025. The findings were contained in the 3T Impex Non-Oil Export Index Report 2026 released by 3T Impex Trade Consulting. According to the report, Nigeria's non-oil export value rose by 93% within 5 years to reach $6.17 billion in 2025, reflecting strong international demand for Nigerian products. The report, authored by trade expert Dr. Bamidele Ayemigbo, analyzed 87,824 export transactions conducted between 2021 and 2025 and also surveyed 94 active non-oil exporters across the 6 geopolitical zones. Despite the growth recorded in export value, the report warned that structural challenges, particularly logistics and energy costs, were threatening the survival of many exporters, especially micro, small and medium enterprises. It noted that the logistics benchmark index dropped to a critical 12.8 out of 100, the lowest score recorded among all performance indicators accessed in the study. And now we'll go on a quick break, and when we're back, Business 360 continues looking at some global economic outlook and the markets. Don't go anywhere. Welcome back. It's still Business 360, and my name is Vladimir Kim. And now we'll be looking at some global indicators, especially from Japan's point of view, at export growth beats estimates. First, up next, it is global economic outlook. And now, in global economic outlook, Japan export growth beats estimates. Japan's export jumped 14.8% year-on-year to a near record high of 10,507.3 billion Japanese yen in April 2026, accelerating from 11.5% growth in March, while marking the fastest pace in 3 months and topping market forecast of 9.3%. It was also the 8th straight month of increase, reflecting resilient global demand despite supply disruption caused by the war in Iran. A shipment grew to China 15.5%, the US 9.5%, ASEAN. Sales rose for all components, transport equipment 6%, notably motor vehicles and car. Electrical machineries 28.6%, boosted by chips and IC. Machineries 12.5%, led by semicon machineries. Others 18.1%, driven by scientific optical instruments. Manufactured goods 15.3%, are due to non-ferrous metals, and chemicals 8.8%, notably plastics. Prolonged disruption to the Middle East supply route, however, could weigh on exports by slowing global demand, particularly in energy-intensive sectors. Now, it would be a good time to go to the market, and now to the markets. Welcome to the market outlook. First, we begin from the energy market as Brent crude rises after a sharp drop. Brent crude futures rose above $106 per barrel in the early hours of the morning, but held most of the nearly 6% drop from the previous session, as President Trump said the U.S. was nearing the final phase of negotiation with Iran, failing expectation that Middle Eastern oil supply could gradually return to the markets. Tehran is currently evaluating Washington's latest draft. The draft responds to its 14-point proposal. A potential deal would likely lead to the removal of both countries' naval blockades on commercial shipping through the Strait of Hormuz, while tanker traffic has been disrupted since March. Supply optimism was further supported by satellite data showing 3 supertankers passing through the strait. Still, analysts caution that global physical oil markets are likely to remain tight, given that shipments from the Persian Gulf can take nearly 2 months to reach end markets. Well, quickly, let's go to the market itself. First, the energy market, and afterwards, we'll look at other markets like the metals and the agricultural market. The energy market first, a price level for crude. U.S. crude stands at $97 per barrel, downward by 0.7786 points, a negative 0.8%. Brent, which represents Nigeria's price benchmark, the price level stands at $104 per barrel, downward by a negative 0.93% decline. Quickly, let's look at the metal market. A metal commodities comes with a price of gold at $4,533 per ounce, a downward 4.81 points, a negative 0.11%, a decline. A silver price also downward, negative 0.44%. Copper price downward, negative 9.7% at $6.22 per pound, the price of copper. A steel price falling to 3,169 Chinese yuan per ton is the price of steel. The agricultural market. Agricultural market indicates the price of soybeans at $1,193 per bushel. Soybeans are dropping 6.72 points, a negative 0.56%, and wheat price at $649 US dollars per bushel, dropping 11.16 points this morning. Palm oil price at $4,472 US dollars, rather, 4,472 Malaysian ringgit per ton, falling 111 points, a negative 2.42%. And now to the financial markets. After looking at FX updates, instead of looking at just a broad share of FX updates, we'll begin the financial market with the Nigerian currency as the Naira appreciates as CBN holds interest rate. The Naira eased against the dollar on Wednesday at the official foreign exchange market after the Central Bank of Nigeria held the interest rate at 26.50%. The CBN data showed that the Naira strengthened slightly to 1,373 Naira 34 kobo per dollar on Wednesday from 1,373 Naira 87 kobo exchange on Tuesday. This means that the Naira strengthened marginally and by 50 kobo against the dollar on a day-to-day basis. Meanwhile, at the black market, the Naira remained unchanged at 1,400 Naira per dollar on Wednesday, the same exchange rate recorded the previous day. The development comes as the CBN Monetary Policy Committee on Wednesday holds the country interest rates at 26.50%. Meanwhile, the country's foreign reserve has continued to rise since May 8, 2026, standing at $48.72 billion as of May 19, according to the Apex Bank. Let's go to the market itself, the US dollar against the Naira, and afterwards we'll look at the rest of the currencies, the Euro USD and the cryptocurrency market. The US dollar against the Naira. A US dollar against the Naira, a price level goes at 1,371 Naira, equaling $1. Well, a drop of 67 points in this regard, a 0.67 point in this regard. The euro against the US dollar. The euro against the US dollar price level stands at 1,594 Naira, equaling €1. A drop of a negative 0.728 point, and the pound also falling against the Naira at 1,843 Naira, equaling £1, and the pound dropping a negative 0.4 points this morning. Well, let's look at the Euro USD market. Then afterwards we'll talk about a crypto market, and before we end the show. The Euro USD market price level stands at 1.16 US dollar, equaling €1. And the euro are gaining, but volatility has been quite low in this market. Not a significant change, 0.05% appreciation for the euro and the pound against the US dollar, and the price level standing at 1.3431 US dollar, equaling £1, a 0.07% appreciation. The Australian dollar struggling a bit against the US dollar, and New Zealand dollar also gaining, but the volatility of the market are quite low. Let's conclude today's Business 360 looking at the cryptocurrency market. A crypto market, a digital coin, indicates the price of Bitcoin at $77,638 for one Bitcoin. Bitcoin gaining 175 points this morning, a 0.23% appreciation. Ether at $2,127 are gaining just slightly, 0.01%. Binance gaining 3.8 points. Cardano falling slightly. Solana a little here, little there. And ripples are not really a significant change in the market. The market this morning, from the commodities to the financial market and the digital currency, has been of low volatility, but equally of mix of fortune. The most we have to talk about when it has to do with business, also looking at what the equity market brings, has been ups and downs. But we have to draw the curtain in today's edition, even though Japanese stock surge as SoftBank jumps at 20%. We have to draw the curtain in today's edition of Business 360. Thank you for being a part of it. My name is Blyden Kim, and thank you for watching.